what if you walked into your favorite store and overnight, everything was 10% more expensive? Your morning coffee, the new phone you've been saving for, even the car you need to get to work. On February 24th, 2026, the US government enacted a new 10% global tax on most imported goods. So, we've got some important questions to answer. First, what exactly is this new tax and why was it created? Second, how does it impact the price of the things you buy every day? And finally, is this 10% price hike the new normal? The story starts on February 20th, 2026, when a Supreme Court decision suddenly eliminated the government's authority to use its complex system of country-specific tariffs. The White House switched to a different, much blunter tool, a law from the 1970s called Section 122 of the Trade Act of 1974. This law lets the president impose a temporary, broad surcharge on imports to fix fundamental international payments problems. The result was a flat 10% tariff applied to most goods from nearly every country, which went into effect just 4 days later on February 24th. This move replaced the old chaotic system where tariffs varied wildly from one country to another with a single global rate. This new tax is also layered on top of any other duties that already exist, creating a new, higher baseline cost for bringing goods into the United States. Now, let's break down what this means for your wallet. The simple answer is that almost anything imported into the US is now more expensive, but some items are getting hit harder than others because of separate pre-existing tariffs that are still in effect. Before this new global tax, the US already had major Section 232 tariffs on steel, aluminum, many cars, and auto parts. While the new 10% tax doesn't stack on top of those specific tariffs, it does ensure that almost everything else now has a significant import tax. And while the new rule is global, some countries are still treated differently. Goods from China, for example, were already facing Section 301 tariffs, and those will remain. Similarly, goods from Mexico and Canada that don't meet USMCA exemption rules will still be subject to their own tariffs. There are some exceptions. The 10% surcharge doesn't apply to products like pharmaceuticals, certain critical minerals, and some aerospace parts. But for the vast majority of consumer goods, from your electronics and clothes to your furniture, the cost of bringing them into the country just went up. If you're finding this breakdown helpful and want to understand how government policy really affects your wallet, take a moment to subscribe. We cut through the jargon to give you the information you actually need. This isn't just abstract economic policy. These tariffs directly impact your household budget. An analysis of prior tariffs by the European Central Bank found that foreign companies typically pass on the entire cost of the tariff to the US importer. That means a 10% tariff leads to a nearly 10% price increase for the American company buying the goods, a cost that inevitably gets passed on to you. So how much are we talking about? The Tax Policy Center estimated that the tariffs announced through 2025 could reduce the average taxpayer's real income by thousands of dollars in 2026. This isn't just from higher prices on taxed goods, but also from the broader economic disruption it causes. And it's not just about prices. The budget lab at Yale projected that a broad tariff regime like this could increase unemployment. The logic is simple. When imported materials become more expensive, it costs American companies more to make their products, which can lead to layoffs. A Federal Reserve study on the 2018 steel and aluminum tariffs found they were linked to tens of thousands of lost jobs in the manufacturing sector. This brings us to the big question: is this 10% price hike here to stay? The answer is, maybe not. The law used to create this tax, Section 122, has a crucial limitation. Any tariff imposed under it can only last for 150 days unless Congress votes to extend it. This means the 10% global surcharge is set to automatically expire on July 24th, 2026. If that happens, you could see prices on many goods fall as the tax disappears. However, the administration has already threatened to increase the rate to 15%. And while most trade experts believe a congressional extension is unlikely, there's a potential loophole. The president could let the tariff expire, declare a new emergency, and simply restart the 150-day clock. Essentially, This tax is a temporary bridge while the administration explores more permanent options under other laws, like Section 301. So, America's new global tax is a sweeping but possibly short-lived economic experiment. It simplifies a chaotic tariff system but raises costs for businesses and the price of everyday goods for millions of Americans. The critical question is, what happens after July 24th? Will the tax expire, providing some relief to your wallet? Or will it be extended or replaced, locking in higher prices for the foreseeable future? For now, we all just have to wait and see.